The first detailed snapshot of the housing market since the latest interest rate rise and the federal budget's tax reform announcements has been released. The Cotality data shows national home values flatlining, with Sydney and Melbourne leading the downturn. Other capitals are still recording growth, but the momentum is slowing. ABC Business Daily host Carrington Clarke joins me now. Carrington, what does this Cotality data tell us about the state of the property market right now?
Yeah, what it tells us is that there has been a marked shift in momentum when it comes to property prices. So for the month of May, nationally, home prices flatlined. They didn't go anywhere, but they are still up 8.8% for the year. There was very strong momentum in the second half of 2025, but we have seen this now significant shift because of these three interest rate rises imposed by the Reserve Bank, but also first the speculation and then the announcement of significant changes to the taxation arrangements when it comes to property. So we have seen also a real divergence in different markets around the country. We'll take the two extremes. On one hand, you have Melbourne, where we saw a fall of the month of May of 0.8%, which means it's only up 0.5% for the full year. Perth, on the other hand, still very significant growth in Perth, 1.5% for the month of May, and up nearly 26% for the year. So you can really see different speeds in different places, driven by economic conditions in those markets and the difference between supply and demand.
And so, I mean, what we're looking at, is it good or bad news?
It completely depends on your perspective on this. On one hand, you can see housing as a basic human need, the need for shelter. And normally when we have basic needs, we don't want them to be rising in price at a significant clip. No one would want to see, for example, the price of water increasing at a huge clip or the price of food. But the issue with housing is it's both a basic human need, but it's also an investment vehicle, an asset for many people. And in Australia, it's a place where a lot of people have built significant wealth. And if they start to see prices fall of their major financial asset, then they feel poorer, and that can have real impacts on the broader economy because they might stop spending as much. And this is a really difficult line for the government to walk. They, on one hand, talk about the need to make property more affordable, and all other things being equal, that means you want prices to come down. But they also don't want prices to be coming down so significantly that it actually hurts the perspective that people have about their own wealth, because that has impacts on their spending capacity. So they're trying to, on one hand, slow the rate of growth, but not significantly change conditions so that housing is no longer a good investment. Some really interesting analysis out by Macquarie Bank last week suggesting that they don't think that over the next, say, 2 decades, that housing will be a good investment. In real terms, that is stripping out the impact of inflation, that perhaps housing won't go anywhere. And obviously that's a major change from what we've seen over the past couple of decades. And so that would be a real step change in how people see property within Australia. Is that good news? Well, it's good news if you're somebody who is focused on housing being a basic human need and you're interested in getting into the property market, but it isn't good news if you want housing to be your vehicle to greater wealth accumulation. So this is going to be a major issue over the coming months, and the government is going to try to walk that fine line of what do they want to see. Do they want to see continued falls in property prices, or do they want it to stay flat? Or do they want to continue to see it grow as we have seen in recent decades?
ABC Business Daily host Carrington Clarke, thank you.